What's up, everyone? Dylan here, and today's episode is Crypto Car Talk. No, it's not really Crypto Car Talk. I'm going to be talking about why this Bitcoin cycle, why this crypto cycle could be very different than the last crypto cycles. So it's going to be very important to pay attention to this video, just because it's a way to think about things that are going on now that might have been different than before, that will help you get a better perspective when you're like, is Bitcoin going to go up? Is it going to go down? Is our cryptos over? Are they going to go on this bear? Is the bull run over? Are we in a bear market? Those are very important questions, and the lens in which you ask those questions and you view the answers is important. So like, subscribe, comment below, and let's get into it. So I know with the recent crash, there's a lot of talk about, okay, we're potentially entering into a bear market, right? The bull run might be over, and I saw a chart. It was some trader getting interviewed, and it's like, maybe you've seen it, and I wish I could display it here, but basically it's like shows a rise in price, right? The peak, and it's like, someone's emotions in a market, like in a bull market, and how people's, the emotional roller coaster that people go through, corresponding to the market, right? Whatever asset they're involved with. So basically, the chart goes up, and then it goes down, and then kind of languishes down in the bottom, and then at the edge of the chart, then you start to cycle up again. And that's something that Bitcoin and cryptos have went through, right? It's like every 4 years with the halving of Bitcoin, after it halves, then there's a bull market, right? It's become very predictable, or what we thought was predictable. So one thing is, like, you can use past trends to help understand the future or what might come in the future, but just because it happened in the past doesn't necessarily mean that it's going to happen in the future exactly like that, right? That's going to play out the exact same way, right? So you can use them as guidelines, but there's very few things that happen in the past that you can say, because it happened in the past, with certainty it's going to happen in the future. Like things like comets and the rotations of planets and the orbits around stars and all that kind of stuff. That stuff, pretty predictable. But things like the weather, just because you have weather patterns doesn't mean that this year's going to be the same. And things with crypto, right? It's changing. It's going through a different life cycle, a different cycle, and it's very important. And so here's why, right? So I was talking to my friend today, and I was like, "Hey man, have you signed up for Coinbase yet? Have you signed up for your exchanges? Like, you can get free money by signing up. It's pretty cool, and you can learn about crypto. All you have to do is put $100 in, and for me, I think that's pretty cool. Once you understand that, you're like, okay, I can learn about it, and I get paid free money, free cryptos that they could grow in value. I think that's pretty cool, right? I think it's cool when companies offer incentives, like monetary incentives, to sign up for their programs. Dropbox was hugely successful when they offered a bunch of free storage. When they came out, if you don't know, Dropbox is like a file sharing, like Google Drive, but its own software, and it's very useful. But when you would sign up, they'd give you something for free. Robinhood gives you a free stock. So a lot of places use this incentive and take advantage of it, right? If there's places giving out free money, if you can get it, go after it. So anyways, he's like, yeah, man, he's like, I just haven't, I haven't really committed to it. I haven't done it. And he's like, I'm going to get around to it. Like, I'm going to get around to it tomorrow. And I'm like, okay, well, the markets went down, it crashed really hard. So when you sign up and you put some money in, you're buying low, right? At least my view, you're buying lower than you could have bought all year, basically. And the free cryptos you get, if you get them, right, they're getting given to you at low prices. So if things continue to go up, then that's not a bad situation, right? That free money could turn into more money than you put in. Because I think you put in $100 and you get $10 free Bitcoin. If Bitcoin's at its lowest, it was at 30,000, right? And it doubles, it goes back up to its all-time high, which is around 60, right? You've just doubled that. And I know $20 doesn't seem like a lot, but it is for some people, right? And it's $20 you didn't have before, or $20 worth of Bitcoin you didn't have before, which is better than $20. But he's like, okay, yeah, my friend talks about it all the time, but maybe I'll do it tomorrow, right? And I bring this story up because he'll get around to it eventually. But there are waves of people, waves of adoption that are happening with cryptos and the market and all that, right? And he's representative of a certain type of person. Perhaps these people in your life that they have other things they're focused on, which is totally fine, right? We live in a chaotic world, and it's cool if crypto is if you're not on top, the cutting edge of things. Not everyone's an early adopter, right? I certainly wasn't when it came to crypto, and we're still early. But there are people who were back, there when it began, and 2011 talking about it. If only would have known about it then, right? But I think in a few years you'll be saying, if only would have known about it or done something about it in 2021, because it seems crazy now, and there's a lot of talk about, okay, well, cryptos are going to fizzle out and go into this bear market and kind of languish down at these low prices. And I can't predict the future, and none of this is financial advice, but I don't fully believe that, and here's why. So people like my friend, eventually they're going to invest in it, right? And that's more people that are coming into it, right? It's just waves. Early adopters are in, and the more early adopters that get in, the more people like my friend that you talk to, right? If you're an early adopter, and the more that person hears like, oh, you should get in, you should get involved, right? And the more they hear that, eventually they're going to do it, right? And then eventually they're going to tell people, right? And it's just going to continue to spread. I think one of the guys in the crypto world, I think Willy Woo, I think that's his name, he said something about we have like 2 to 3% adoption of our exposure to cryptos, and it's doubling. So that doubling, 2 to 3%, I've done this in my other videos. It's like, all right, let's say it's 3%. Like next year it's 6%. The year after that is 12%. The year after that is 24%. The year after that is 50% of the population. And the year after that, it's 100% of the population. So it can happen really quickly. So why is this cycle might not be like the other ones? Well, that's also happening on the institutional level. And at the institutional level, right, these companies, it takes time for them to actually create channels into Bitcoin, to be able to invest in Bitcoin. Some can directly invest in it, right? Some can put their treasuries in it. And when they put something like their treasury into Bitcoin, it's not to take it out immediately, right? They're putting it, they want to hold it and have it in there for, 5-10 years. So that's money that's flowing into it. That's not going to leave, right? And so even if the price goes down, like Bitcoin's market cap was around $1 trillion. It's a little bit less than that now. But I think it's going to continue to go back up, because as more institutions put this long-term money into the market, right, it's going to stay there, right? It's going to continually grow, and more of these institutions are going to start adopting, right, and putting more money in, and that's going to start to add up, right? It'll start as a trickle, right? And you see it. That's how Bitcoin hit $1 trillion, because you have more institutions, more people trickling in, right? But then it's going to become like a wave. Like as soon as, these companies see they can get good returns, as soon as Bitcoin then goes from $1 trillion to $2 trillion, which is totally reasonable in the foreseeable future, right? If all these institutions and people continue to adopt it, right, it makes sense, right? If we're only at 3% of the population being exposed or having money into it, and next year we'll be at 6%, right? That's just doubling the amount of people into it. So you can see how we may not have a bear market like we had before. And this kind of makes me think about, and maybe you should think about this, like we're approaching a singularity, right? To some extent, we could, right? This is me being optimistic and hopeful and all that, but like a singularity to where it's a point at which you can't see beyond, right? A singularity with a black hole, like anything that crosses the event horizon, you can't, because the black hole, the power of gravity even pulls in light particles. Even light can escape. So a singularity, they talk about this in black holes. They also talk about it with artificial intelligence and things like that, right? So it's like if artificial intelligence, like the sci-fi style artificial intelligence, comes about, right? At that point, none of the things we know in the past will actually be able to determine the future, because it's such a revolutionary change. Not none of the things, but like a lot of things we know. It's such a drastic change that we can't even predict it. And I think we may see something like that with Bitcoin, right? With the amount of money that can flow into the system, it'll start very slow, and then the shift will happen very quickly, right? It's like almost like there's current dams if you think of the current financial system and where money is currently, there's these dams. They're in all these different dams, right? And money will slowly start to trickle out from those dams, and eventually the whole dams will break. And so the big lakes behind them, right, the big amount of money in equities and bonds and things like that will become less big, right? There'll be less water in those dams, less money in those dams, and they'll move Bitcoin. I see it as Bitcoin being like downhill from them. So they'll just move downhill to the Bitcoin pond, which will turn into a lake, which will turn into an ocean. And, this is all, hypothetical, but it's happening before our eyes. And so when I see news about people saying, oh, well, it's going to languish and peter out and all that, it's like, but that doesn't make sense with what you see actions, like the actions you see being taken, right? You see banks making it so you can buy Bitcoin through the bank, right? So you can take your funds in your bank without even leaving your bank and invest in Bitcoin. You're starting to see funds, like Kevin O'Leary came on, and he was not a Bitcoin guy for a while. He's from Shark Tank, and he said he's now investing 3% of his portfolio into cryptos. Graham Stephan, YouTuber, like does financial stuff. Smart guy. He says I think he was going to do 3% of his portfolio into cryptos, right? 3 to 5%, something like that. And it starts there. And this is something that Michael Saylor has talked about, right? It starts with these fund managers, these portfolio managers, these financial advisors saying, at this point in time, you should put anywhere between 1 to 5% in, right? That's about the range of conservative range that anyone who accepts crypto will say to do, right? You should put, 1 to 5% of your investment portfolio into it as a, to potentially capture some of the growth and as a potential hedge against some inflation, stuff like that, right? That's not really that big of an amount, 1 to 5%. But something that Michael Saylor says, he's like, so if you carry that out, if you believe that that's going to start happening with all these institutions, well, the money's going to keep coming into this, right? And when that happens, that 1 to 5%, the return on that investment, that 1 to 5%, because if everyone just did that this year, like if everyone's asset managers, portfolio managers, financial advisors, like, hey, you need to put 1 to 3% in cryptos, that's going to significantly increase the amount of money that goes into Bitcoin. And the people who've put their money into Bitcoin now are going to see that they got a huge return on that money into Bitcoin, right? So we're getting these network effects that are starting to compound and starting to build up. They're more in place now than there were in the last cycle, in the 2017, 2018 cycle, right? I think Bitcoin only got to like 250 billion, but at $1 trillion, right, and the amount of people it's reached, right, this stuff is adding up, is really building up. And so all those people that put 1 to 5% in their portfolios into cryptos, they're going to see wild gains, right? Hypothetically, we can't predict the future, but they're going to see those gains. And so what do you do when you see in your investment portfolio that one asset is growing by 100%, 200% a year, one asset class, and the other ones are growing at like 10, 20%, right? It even makes 30% look bad. And then, the other layer you add on to this is inflation and the cost of capital, right? So if money keeps being printed by these central banks, then the cost of capital is going up. So the hurdle rate, as it can be called, like the hurdle rate, so it's pretty much the rate that you have to beat the cost of capital, right? And so if it goes if it's at 10% and then goes to 15%, your company has to grow more than 15% just to pay for that increase in the cost of operating that business, basically. And it's really going to be really hard to keep up. And when you're looking at that and you're investing in things and you see over here, you got 100% return, and over here you got a 15% return, which is just equal to your money, and you just broke even, well, what are you going to do? You're going to start putting more of your investment into this thing that's growing. And this is going to have a compounding effect. It's going to add up. It's really going to, and it can take off really quickly. And eventually you're going to, I think it was, Michael Saylor said, and I reference the guy a lot because he's big in the Bitcoin world, and he's got a lot of good insights into, these financial decision makings from the position of a CEO of a publicly traded company. But basically he's like, the mindset is going to shift from, I should put 5% into Bitcoin just as a hedge, to, man, why did I keep 95% of my portfolio in assets that are underperforming compared to the other 5%? So how can I move more of that money over? And so then next, instead of 5, it's going to be, well, now Bitcoin's at $2 trillion or whatnot. We think that maybe you should put 10% of your portfolio in, right? And then it's going to be 20, and then it's going to be 30. And then it's going to, balance out between the other ones, but it could become all of people's portfolio. I mean, Michael Saylor, he put, I don't know how much, like he has over 111,000 Bitcoins. I don't know what percentage of his portfolio is all crypto. But if that happens and people start scaling up their investments, right, doubling the amount of money, even if it's just small percents, that adds up, and those gains will be transferred to the people who have their money in the market currently. And that's how you can really see this exponential growth. And that's how even something like the price cooling off with Bitcoin, or seeming to cool off, how it may never cool off down to the low levels. It may never languish at like, it hit 30,000 when it crashed. And people say, well, it could go down to 15, 20,000, or may disappear completely. But not if these dams, the trickle of water flowing on these dams turns into creeks, then turns into rivers, right? Then turns into a raging river as the dam breaks. Like, as that happens in more and more places, just the amount of money in Bitcoin and cryptos isn't going to go down, right? It's going to keep slowly going up, and the amount of sources going into it's going to compound. So it's very, very important to think about and consider. That may never come to pass, but I believe something like that is on the horizon. And if you see the writing on the wall and you start noticing, well, this person that didn't talk about crypto is now talking about crypto, right? This person that wasn't in it a month ago is now in it. And you start projecting out, it's like there's, 7 billion, 8 billion people, 8 billion people in the world. And those people that, are operating like that represent whole groups of people, right? The early movers, people like I'm not an early mover, but I'm earlier than people that haven't done, like my friend, right? We're still a small percentage, right? If you're watching this and you have money invested, it's still a small percentage of the population. But people that are about to get money invested, right? Who don't know how, but are looking for ways to do that. And that's just going to keep growing. So I guess the whole point is you can't predict the future of Bitcoin based on all the past cycles, because we're reaching a point where a potential singularity might happen, right? The environment, it's evolved, right? Bitcoin's not in its, it's like went from being a baby to, baby and a kid to like a teenager maybe, or even from like a teenager, young adult, right? It's really transformed, maybe not young adult, but like maybe a teenager, is really transformed. And so the way it's going to operate, it's going to be slightly different than what it did when it was a baby, right? When it was a kid. And it could still be a kid and still like operate, similarly to how it has in the past years. That's still possible. So understanding how the cyclical nature of it, right? Understanding that, this bull run came after a halving, right? Or a halving of Bitcoin, last year in 2020. And that then the price went up, and understanding that in another 3 years this is going to happen again, that cycle, and maybe that's the cycle where everything breaks out. Who knows? But it seems more likely to me that it's going to start breaking out sooner, and it's not going to dip down like it was before. It's going to create a new style of something, or something even exponential, or something that dam breaks, boom, all the water from the dam is now turned into a Bitcoin ocean. So I think it's very important to think about it like this and understand how that could happen, and understand the power of compounding and network effects, right? Just a simple thing you can do in your head is just, the classic problem of compounding is take a penny and double it each day for 30 days. How much money do you have? You have like ungodly amounts of money. So it adds up so fast when you start doubling, when you have that compound interest, and when you start multiplying the amount of people. It's wild. Just another example before I close out is just look at the pandemic and use that as an example about how fast the virus spread around the world, right? Whether or not you believe in all that stuff, I'm not trying to, just think about how fast the virus spread, right? From person to person to person to person, right? I think it was like, one person could on average transmit it, like one infected person transmitted the virus to like, I think it was like 2.1 people or 3 people on average. And so that's like compounding, right? So just think about that same type of concept with, and that's why that's why it was so dangerous, and places shut down and all that, everywhere in the world shut down, is because at that rate, it's an exponential growth rate. Even though it's just 2 people, you're like, that's just 2 other people. But because it's 2 people, then those 2 people is 2 more people, right? Or each one of those people, now it's 4 people. And each one of those 4 people, now it's 8 people. And then that doubling is really how something can spread out of control really, really quickly. And we saw how quickly that it spread. Like, you and I lived it, we're still living it. So that's the same type of thing that can happen with this. And you saw how the world reacted to that. It's just like wild. So just stuff to think about. So yeah, that's it. In summary, thanks for listening. I know I rambled on a little bit. I'm gonna start making these where I can have some slides and stuff to present this in a little more concise manner. But I got what I got right now. I'm doing what I'm doing right now, and I'm gonna evolve as time goes on. But hopefully this was helpful. Hopefully this was valuable for you. I'd love to hear your thoughts on it. I'd love to hear if you think that we're just going to enter a bear run, and it's gonna languish down in the bear run, 15,000, 30,000 price range or so. Maybe it just stays around here for the next few years until it goes up again. Maybe you think it's just going to completely die out, and maybe you see it like me and you're a little more optimistic, and you see how it could really just go parabolic, go exponential, and really transform very, very quickly because of the amount of people that are becoming aware, the institutions, all the little roads leading to it, all the channels leading to it. Perhaps you think that's much more of a reality, which that's what I think. So love to hear your thoughts, love to hear what you think in the comments, and as always, have a great day, and don't fall victim to any scammers out there. And this is not financial advice by any reasons. It's just my opinion. I'm just some guy on the internet. So do your own research, right? Look things up and come to your own conclusions. And the last thing I heard is one of the number one things in Bitcoin is cryptos. Don't ever invest or spend more than you're willing to lose. So with that, peace.